Hi, I'm Gurm Dhillon and welcome to our Summer 2024 M&A Market Outlook. The start of 2024 has seen month-on-month declines in global deal volumes, although encouragingly, we saw average deal values moving in the opposite direction, driven by the return of a number of mega deals, particularly in the corporate space. Deal volumes have remained dampened by the continued gap in pricing between buyers and sellers. However, many of the factors that were burdening valuations, such as high inflation, interest rate volatility, and inability to pass on price increases to end consumers have stabilised. We now see that pricing gap reducing. Whilst geopolitical factors, including upcoming elections in a number of markets, may cause some uncertainty, and the impact of the emergence of AI-driven M&A is still unclear, M&A is again being seen by management teams as a core strategic option after an extended period of focus on cutting costs and building up cash. We therefore see a pickup in deal volumes over the remainder of 2024. Themes across all industries are continued simplification of business models, more cross-border M&A activity, and deals with value creation at their core. Significantly, Deloitte's 2024 divestiture survey shows that 78% of corporate business leaders are considering at least 3 divestments in the coming year, which is nearly double that of the 2022 survey. We also expect to see a return of PE sponsors to the deal environment, both selling and buying, but we do expect the shape of these deals to vary, including structured equity or minority investments alongside traditional controlled deals. Do look out for our follow-on M&A Perspectives video on PE divestments later this summer. So let's take a look forward by industry into the rest of 2024. In tech, media and telco, further M&A is expected in data centres and European telecoms operators. UK fibre players are likely to consolidate, media deal making will pick up from last year's lows, and we anticipate tech deals to increase in the second half of this year. For the consumer industry, the prominent trends are premiumisation and wellness, particularly industries aligned to these, which include VMS, skin and beauty, and wider consumer health. We expect consolidation in the consumer health and beverage sectors, along with continuing portfolio rationalisation. In energy, resources and infrastructure, we've seen limited activity in the UK's oil and gas industry, but global consolidation plays, particularly in the acquisition of reserves, are expected to continue. Power and utilities will be looking to invest their capital, and this is likely to be deployed on energy transition opportunities. M&A is likely to be focused downstream on customer-facing service networks. In financial services, specialist niche banks continue to be subscale but attractive for their higher margins. It's likely that we will see consolidation among challenger banks as they strive to achieve scale. We expect to see more non-core disposals from banks and insurers to improve returns and leverage capital for growth. There are continued opportunities for inorganic growth and portfolio reshaping in life sciences and healthcare. There's obvious crossover with the consumer industry in the consumer health space. In pharmaceutical, there will be a move towards personalised therapies and selected IP and pipeline molecule acquisitions by the super pharmas. And finally, private equity will continue to double down on portfolio value creation through transformation and portfolio M&A to achieve their exit returns. Tech, fintech and healthcare will remain active for new private equity deals, and energy and clean tech are also likely to attract increased focus. Whilst an increase in deal activity seems inevitable, prospective deals will take longer to execute as they continue to attract heightened scrutiny by boards, investment committees and lenders. However, optimism does now prevail.